Assalamualaikum warahmatullah and greetings of peace. Welcome to episode 6 in our Takaful tutorial series. This episode is entitled Concept of Takaful or Shariah Compliant Insurance. I'm your tutor, Tamizi. Let's recap what we learned from the previous episode 5. From the previous episode, we learned that according to the Special Task Force, the insurance contract is tainted with riba. Remember this? Okay. The riba that we were talking about was mainly about riba buyung, which is riba fadl and riba nasya. Riba buyung appears when ribawi items, these are the 6 provided in this hadith, they are subjected to certain rules. And when these rules are not followed, riba buyung will appear. And we also learned that the contemporary scholars have expanded the definition of ribawi items to include currencies. So we have the 6 that were mentioned in the hadith, and contemporary scholars have added currencies. So in this chart we can see US dollars, and we've seen this previous, right? In the previous episode, we also learned that insurance contracts are deemed as riba because the monies being exchanged are not equal. This is riba fadl, not equal. Pay premium 1,005, pay claims 100,000. They're not equal, so they break the first rule. And they're not spot. The exchange happens at different times. Say, for example, in this example, the premium was paid in January 2020, and the claim was paid in May 2024, different times. Therefore, it brings about riba nasya. Okay. Having learned all this, we can now understand the subtle difference between riba and trade as mentioned in the Quran, Surah Al-Baqarah, verse 275. Remember, the surah says that they say trade is like usury, whereas Allah has permitted trade and forbidden usury. Remember, we said that from the above verse, the above verse makes a distinction between trade and riba. So what's the difference? And we showed this example. Both made a profit of 200, but one is prohibited as riba, one is permissible as trade. So what's the difference? Now that we have learned the rules of the ribawi items, okay, the context makes sense now. Whatever that involves ribawi items, they are subjected to these 2 rules: equal for equal and spot, or when they are not like for like, subject to spot. But those outside the 6 ribawi items, they are not subject to ribawi items at all. So if we look at the verse again, this is prohibited because it involves the exchange of money with money, and it's unequal, and this involves the exchange of non-ribawi items. Okay, that's why it is permissible. So hopefully by now we'll understand what the Quran was trying to say, that there's a difference between riba and trade. The difference makes more sense if we look at it in the context of the ribawi items just now. In this episode, we will discuss how the Sharia prohibited elements of gharar, maisir and riba. We discussed this in the previous episodes, how these are eliminated from the insurance contract. We will also discuss why insurance contracts need to be converted from one of exchange uqud mu'awadat to a gift contract, tabarru'at. We will also discuss the vital role of tabarru' in transforming insurance to become Shariah compliant. This episode will also discuss the practical difficulties to operationalize the concept of takaful, especially in jurisdictions where dual financial systems of conventional and Islamic are practiced. For example, Malaysia is a good example of this, where we practice both conventional Islamic, and we'll see later on that there are some practical difficulties to implement this concept called takaful. May Allah bless you for your effort to seek knowledge on takaful. Do share the videos with your family and friends. There is no copyright. Okay, let's look at episode 6 now. There are 4 topics. Okay. Before we start, let's recap the Sharia issues in insurance. Remember this chart? There are actually we have the issues of riba fadl. We saw this now, where the premium and the claims exchange, the amounts are not equal. This gives rise to the problem of riba fadl. We looked at riba nasiyah, where the exchange happened not spot but at different times. This involves insurance, yeah. Okay. We also look at gharar, which is excessive. Why is it excessive? Because there's the risk of non-delivery of the promise, whereas the insured have paid the premium, certain, the insurance obligation to pay the claims, it depends on an event that may or may not happen. This gives rise to excessive gharar in the insurance contract. We also learned that in most cases, no exchange takes place. The premium is paid, and in most cases, no claim is paid because the fortunate many did not suffer any loss and was not paid anything. So when there's no exchange, riba, gharar becomes maisir. Okay, and this is what happened in most cases. So this is why insurance is said to be akin to gambling. What is the issue behind all this? The issue is because of all this, the root cause is the insurance contract. The insurance contract is an exchange contract where money is exchanged for money. Money for money is not a big issue, except that according to the hadith we saw just now, when it involves ribawi items, the exchange must be equal for equal and hand to hand. And in both cases, this doesn't happen. So this was what was issued, and of course there's the non-Sharia compliant investment. So this is the special task force ijtihad, usury, riba, and investment. Okay, so these are the issues. So what's the root cause? The nature of the insurance contract, which is an exchange contract. Okay, right. So that's the Sharia issues that we discussed in the last 2 episodes. So what's the solution? Insurance is important for the society, for the modern society. So how do we solve this problem? The solution is very simple. The special task force recommend that to change the basis of the insurance contract from an exchange contract to a donation contract. In the special task force recommendation in paragraph 2.6.3.5, this is what they say. This is of course translated by me as a tutor from the report. Yeah, under the Islamic insurance system, part of the contribution, which is the premium from every participant, must be made with the intention of tabarruk, not just for buying and selling. The existence of tabarruk makes the transaction permissible and valid according to the Sharia. So this one word, tabarruk, makes the transaction, the insurance transaction, permissible and valid. The opinion of the Special Task Force mirrors that of Dr. Yusuf Qardawi, where in his book, The Lawful and the Prohibited in Islam, he said that, in my view, insurance against hazards can be modified in a manner which brings it closer to Islamic principle by means of a contract of donation with a condition of compensation. Okay, so tabarruk is the vital factor that changes the contract of insurance from an exchange contract to a donation contract. Why is this so? Why change the contract basis? Why need to change the contract basis? Tabarruk transformed the insurance contract from one of exchange to that of a gratuitous contract. According to a prominent scholar, Tan Sri Dr. Daud Bakar, he was my guru, he explained in one of his papers, uncertainty becomes tolerable in a gratuitous contract, such as donation, gift, will, endowment, rebate, discount, etc. Why is that so? This is because once the magnitude of gharar becomes small and therefore tolerable, the problem of mahir automatically becomes a non-issue. Let me explain this, yeah? Okay, remember this chart, okay? Insurance is said to be, the gharar is said to be excessive, therefore the contract becomes void. Now, by this because of the exchange nature, but once it becomes a gift contract, gharar becomes little, therefore tolerable, therefore the contract becomes permissible. Okay, let me try to explain this further, yeah? Okay, from an exchange contract, tabarruk makes the gharar becomes tolerable. Why is that so? Okay, let's look back at the slides that I checked before. Okay, remember these pictures, yeah? In this transaction, you pay money and you may or may not get what is promised on the other side. And if you get, you don't know what to get. But if you were to give this is not an exchange contract. This, for example, the owners of this say, okay, play this game. I'm going to give you. The moment he says it's a gift, tabarruk, he wants to give this, gharar becomes a non-issue, because in a gift, it's okay. He doesn't have to be very specific to what he's going to give. You may get this, you may get this, you may get this. So that's why Dr. Daud Bakar said that when it's a gift contract, gharar becomes a non-issue. Similarly with this, you could get this, you can get that. This becomes gharar when you don't know, when it's an exchange contract. The moment you say, look, I'm going to give this, play this game, it's free, don't have to pay anything, I'm going to give this. So, okay, so the moment it's a gift contract, it becomes tolerable. Similarly with this, you don't know what you're going to get. If it's an exchange contract, gharar becomes an issue because you don't know what you're going to get. But if it's a gift contract, gharar becomes tolerable. Similarly with the spinning of the ice cream. Remember the ice cream? If it's an exchange contract, you don't know whether you're going to get 1, 2, 3, 12, it becomes gharar. But the moment you say, look, I'm going to give you ice cream, it's a gift. You don't have to pay for it. It's a gift. So, gharar becomes tolerable. It doesn't matter. You can get 1, you can get 2, you can get 12. It's a gift. So that's why the necessity to change the contract basis from one of exchange to one of tabarruk. This is a simple yet profound solution provided by the STF. It says, don't buy and sell, don't exchange. The premium you just gift, you tabarruk the premium. And so once you tabarruk, gharar becomes little, yasir. And when it becomes yasir, it becomes tolerable. And maisir also becomes a non-issue, because why? For there to be maisir, the gharar must be excessive. The moment it becomes yasir, small, maisir doesn't become an issue anymore. Maisir, remember, gambling becomes an issue when gharar is excessive. When gharar is small, maisir has no issue anymore. And at the same time, the issues of riba fadl and riba nasya will also disappear, as this only arise in exchange contract. When it's no more an exchange contract, it's a gift contract, it doesn't matter, because riba fadl and riba nasya only occurs when it's an exchange contract. So this is how. So just to summarize, tabarruk is the main factor to Islamize the insurance contract, because tabarruk filters out the objectionable elements. So you have insurance, and it goes through, it's filtered out by tabarruk. Gharar disappears, becomes tolerable. When gharar becomes tolerable, maisir disappears, and riba, whether it's riba fadl or riba nasya, also disappears, because riba only appears when there's an exchange of ribawi items. When it's not an exchange, when it's tabarruk. So once you filter these objectionable elements out, what comes out is takaful. So in simple words, takaful can be understood to be insurance. Takaful is still insurance, but insurance minus the objectionable elements of gharar, maisir, and riba. So this is the one word. Tabarruk is the vital factor that differentiates between insurance and takaful. Many people, when I explain this, they are not convinced. They say, how come one word makes a difference between halal and haram? Shouldn't it be more complicated than this? No. This is how things happen. Let's take, for example, marriage. Before marriage, before nikah, the man and the woman are restricted. They cannot even hold hands, let alone other things. But the moment a marriage the marriage is done, the person say, I accept her hand in marriage. One word, I accept. What was before haram becomes now halal. So this is the requirement, that's all. So this is how I see it. So very simple. It doesn't have to be very complicated. It can only be one word. So in simple terms, what is the difference between insurance and takaful? Tabarruk, just one word. Okay. Tabarruk in the context of takaful need to be explained a little bit. Yeah, in the context of takaful, tabarruk is a donation that's given with a condition. It's given with a condition. An example of such a condition is the takaful benefits, which are payable subject to terms and conditions of takaful contract. For example, let's say everybody tabarruk into a tabarruk fund, and it's paid to the unfortunate few. But of course, what is paid to him is subject to the terms and conditions of the takaful contract. It could be, for example, we'll pay you this much, but we won't pay if this happens, we won't pay if that happens. There is conditional. So tabarruk in the context of takaful is subject to the terms and conditions. So it's a donation given with a condition. Okay. Another peculiarity of tabarruk in the takaful context is that the amount of contribution is determined by the takaful company. You cannot simply tabarruk as you wish. in the Takaful context, it is the Takaful company who determines how much you contribute. You cannot say, I will contribute as I please. After all, it's a tabarruk. Why can't I contribute? Yes. Okay. No, in the Takaful context, especially we will learn in the next episode, when it's in the context of the commercial Takaful, the amount that you have to tabarruk will be determined. Okay, we'll discuss more on this. Okay, this is different from the usual donation, which are usually given at the discretion of the giver without any condition. For example, when you give a donation, the giver just give voluntarily at his own discretion, up to him, but not in Takaful. Yeah, okay. So we'll discuss more of this. For the moment, all you need to understand is that the difference between insurance and Takaful is tabarruk is a donation given with a condition. Okay, okay. Let's just try to summarize. Okay, the difference in the contract basis. So one is a beli. This is the Malay word which means buy. You buy insurance, let's say 1,500. The difference between in Takaful that you beri. This is a Malay word that says gift. Okay, one you buy 1,500, the other one you gift 1,500. It looks the same, but it's not the same. Because why? The insurance contract is between two parties. The insured buy, the insurer sell the protection. Okay, so who bears the risk? The insurer bears the insurance risk. Whereas in Takaful, the contracts among themselves, the participants and the insured, they are the same. They are the ones who tabarruk. They are the ones who give protection. Okay, who bears the risk? The risk is borne by the participants themselves, because it's a tabarruk. Okay, okay. Because of this, the ownership also differs. Who owns the money in the pool? Because it's a sale, buy and sell contract, the premium belongs to the insurer, okay, the shareholders. Whereas in Takaful, the amount in the tabarruk fund belongs collectively to the participants themselves. Okay, this is the concept of Takaful. Okay. Okay, let's go into more detail of the concept of Takaful. Okay, the definition of Takaful given in the Islamic Financial Services Act in Malaysia. Okay, it means okay, Takaful means an arrangement based on mutual assistance, under which Takaful participants agree to contribute. They all agree to contribute to a common fund. Let's call it tabarruk fund for the moment. Okay, to provide mutual financial benefits, okay, payable to participants or their beneficiaries on the occurrence of agreed event. This agreed event could be death, could be a permanent disablement, could be a fire, could be a flood, could be a critical illness, and so on. Yeah, that's why tabarruk is a donation with condition. Okay, right. So this is the definition given. All right, tabarruk. Okay. Now remember this picture. We discussed this in the episode 3, if I'm not mistaken, where there's a common pool. Okay, insurance use this, whether commercial insurance or mutual insurance, and Takaful use this. The difference is that the intention of in Takaful is tabarruk, and what comes out to pay the claim is also tabarruk. They agree to tabarruk into the fund, and the claims paid is also a tabarruk. They all tabarruk, gift to the unfortunate few. In insurance, they use this as well, but the contract is not tabarruk. It is a buy and sell contract. It appears the same. They use the same formula. They use the same concept, but the contract is different. In Insurance is a buy and sell, and buy and sell contract is an exchange contract, and it gives all sorts of Shariah issues we discussed before. Gharar, excessive, maisir, no exchange happens, riba fadl, riba nasiyah. So to overcome this, the special task force is tabarruk. Okay. Now, the special task force, in their report, they recommend the use of the term takaful. This is for Malaysia, yeah. This term takaful is used to mean Islamic insurance. Not all countries, not all jurisdictions use the term takaful, but in Malaysia, because they want to show the difference. Because by using the word takaful instead of insurance, because insurance tend to give the impression to the public that the one giving the protection is the insurer. Not so in takaful, yeah. The one giving the protection, yeah, is the participants themselves. So that's why they recommend the use of the word takaful, yeah. Okay, what are the main characteristics of takaful? We'll go more into the details as we go on episodes 7, 8, 9, 10. Yeah. Just remember, the main characteristic of takaful is that the takaful company does not bear the takaful risk. Conversely, the takaful risk is mutually borne by the participants themselves. This is different from insurance, where the insurer is the one who bears the risk. Yeah. The takaful company, is given the trust to manage the takaful business on behalf of participants. Although the participants agree to help one another, they need somebody to manage the tabarruk fund on their behalf. As such, the company is not entitled to receive any. We'll discuss this further. Yeah. All payments by the participant to enter takaful will be accumulated in a pool. All payments means the premium, in the takaful context, the contribution will be accumulated in the tabarruk fund, and this will be used to pay the claims. It's on basis of tabarruk. All payments of takaful benefits will be paid from the takaful fund. So the amount accumulated in the tabarruk fund, or later we'll call it the takaful fund, will be used to pay the benefits. This will become clearer as we see later on, yeah. And of course, mudarabah concept, this will be discussed. Just in summary, to compare, just at this juncture, yeah, it will become clearer as we go along. So, what's the difference when we compare? The ijtihad of the special task force, insurance is not Shariah compliant because the existence of gharar, maisir, and riba due to the exchange nature. Takaful, Shariah compliant because tabarruk. It's no more an exchange contract, therefore gharar becomes yasir, tolerable, and maisir disappears, and riba also disappears because it's no more an exchange contract. What's the difference in terms of responsibility to provide protection? In insurance, it's the insurance company that provides the protection. In takaful, it is the participants who mutually agree among themselves. They are the ones who provide the protection to each other. Who owns the insurance fund? Shareholders of the insurance company. Who owns the tabarruk fund? Collectively owned by the participants. What's the contract they use? In insurance, it is an exchange contract between insurance company and the insured. In a takaful contract, they use the tabarruk contract amongst the participants themselves. That's the difference. And the investment, of course, for insurance, they have no restrictions in terms of halal haram. Takaful, the investments must be Shariah compliant. Yeah. All right. So that's basically the summary of the concept of takaful. So far, we are talking about the concept. The concept we'll find in this next topic, it's a little bit of problem to operationalize it. It's very nice in terms of theory, in terms of concept, but there are some practical issues that we need to overcome. Let's take a look at what are the problems involved. Yeah. Okay. As we discussed just now, the tabarruk is the main factor that differentiates between insurance and takaful. Based on the tabarruk contract, the participants are the ones who have agreed to bear each other right. All right. So you can see the difference. In insurance, it's the insurer who's bearing the risk. In takaful, they are the ones to provide coverage for each other mutually. Yeah. Okay. This means that the participants, this is the unique part about insurance, takaful, the participants are both the insured as well the insurer themselves. Look, in insurance, the insured and the insurer are different. Okay, in takaful, they are the insurer, they are also the insured. So when you are the unfortunate few, you become insured, you are entitled to the benefits. But the ones paying will be the participants themselves. So they are both the insurer and the insured at the same time. This is the unique part about takaful. Yeah. Okay. So participants are both the insurer and the insured at the same time. Okay. So what's the problem? The problem is what happens if the tabarruk fund is in a deficit. You collect, let's say 100 million, but the claims is 120 million, so you are 20 million short the tabarruk fund. So who's going to bear the deficit? Okay, what happens? Okay, you collect the amount, okay, and the amount is insufficient, despite, remember the law of large numbers we discussed in the previous chapters, episodes. Okay, so what happens if there's a deficit? There are two possible solutions to the problem of deficit, and each with a different set of risk. Okay, one way to solve this problem is, okay, we collected 100 million, claims is 120 million, we are 20 million short. We go back to all the participants earlier. After all, they have agreed to help one another. This is, okay guys, we are short of 20 million. Can you all pay additional contribution? Remember, you paid for your car 1,500 in contribution in tabarruk to the fund. We are short. Can you pay another $100? Every one of you, to make up for the 20 million short. Okay, this is one way. Okay, that's one way. Yeah. So insufficient, we go back to all the participants and say, look, you all have agreed to help one another. We are short. Can you pay additional contribution? Or say, okay, look, we just have enough money to pay for 100 million. Okay, can you agree to accept a reduced payment? I know the contract says we have to pay you 100,000 for death claim. Can we pay you 30,000 because we are short? Oh, sorry, you are too late. By the time you come in, we already paid all the claims, so we are short. Or the other way is, we don't pay you at all. So sorry. This is one way. Okay, either we go back to them and ask for additional contribution, or we pay less because that's all we can afford, or we don't pay at all because there's not enough money in the pool. Okay, this is called social takaful, and this is practiced in some countries. Okay, this is practiced in some countries like this. So the question to ponder is, in the event of deficit in tabarruk fund, remember, we collected 100 million, we have to pay claim 120 million, we are short of 20 million. Do you think the participants in Malaysia would agree to pay additional contribution? Okay guys, we are short, can you pay 100, the additional, we need to collect another 20 million, your share of the 20 million is $100, please pay. Your share is $50, please pay. Is this practical? Would you, if you are a participant in Malaysia, would you agree to this? Or would you agree to, if you are the unfortunate few, you have a claim, would you agree to accept a reduced payment? Your car insurance claim, you claim 5,000, the insurance company says, the Takaful company says, sorry, we don't have enough money, we are in deficit. Instead of paying you $5,000, we'll pay you $3,000 because that's all we can afford. Or, sorry, we don't have enough money, we don't pay your claim at all. Can you accept this if you are a participant in Malaysia or in any other country? Okay. If not, why not? Most people will say no. Most people will not accept this in Malaysia. Why? Because in Malaysia, we practice the dual financial system, conventional and Islamic at the same time. So they are used to, they say, look, insurance will pay you in full. Will pay us in full. Why Takaful don't pay us in full? So I would say in countries where you have both insurance and Takaful, this will not be an acceptable solution to pay less. This is the problem. Okay, Tabarruk, mutual help is good, but it may not be acceptable. Okay, remember when we discussed in episode 3, there's a difference between the mutual insurance company and the commercial insurance company. Commercial insurance company will pay in full. In mutual insurance, they can collect additional. Okay, but it is in these modern days now, mutual insurance companies are becoming rarer and rarer because people like to have a fixed sum. They don't like their premium to be adjusted and later on ask for more. Yeah, okay. So I would say that this is not very practical. This tabarruk. So how can we do this? Okay, as I said, there are two possible solutions. One is this, the other one is this. Okay, we are short of 20 million. Borrow interest free from an independent third party. You can borrow from a bank, we can borrow from other sources to cover the bill. Okay, we have 20 million short, we borrow. Okay, so that we can pay the benefits to the people who needs them. We have promised, after all, the contract, we have promised to pay so much, we should honor our promise. Okay, so this is another way, and this commercial takaful, and this is what we're going to discuss in the next episode. Okay, the problem is that if there is a loan, the loan must be repaid by the borrower, and the borrowers are the participants. So this is how we can solve the problem. Yeah, we can borrow the party, and this is what we're going to discuss in the next episode about commercial takaful. More on this in the next episode. Yeah, in the meantime, okay, the concept of takaful is beautiful, based on tabarruk, brotherhood, solidarity, help one another, mutual help, and all that. But the moment the fund becomes deficit, it has a problem. Okay, it may not be a problem in all countries, but for countries where you can compare between insurance, which is fixed, and if takaful is not fixed, there will be a lot of unhappiness and disagreement. Okay, so this is a problem for countries like Malaysia. So we need to discuss how do we overcome this problem. Yeah, okay. So let's just summarize what we learned. We learned that the root cause of the Shariah issue is the insurance contract, which is exchange. So that is what we learned. So for insurance contract to be Shariah compliant, okay, there must be tabarruk. Once we tabarruk, we filter out this. Okay, so it's a simple solution to the problem of gharar, maisir, and riba, you just change the contract from a exchange contract to a gift contract, and because of that, gharar becomes tolerable. When gharar becomes tolerable or small, maisir disappears, because maisir can only happen in a contract there where the gharar is excessive, and riba also disappears because riba only appears in exchange contract. When the contract is not an exchange contract, like in a tabarruk contract, riba also disappears automatically. Okay, with the inclusion of the tabarruk, the basis of the insurance contract is transformed from one of exchange to a gratuitous contract, to a gift contract. In doing so, the element of riba, gharar, maisir are effectively filtered out, leaving whatever is left is Shariah. So I want you all to understand that actually Takaful is insurance, except that is the Takaful is insurance is because we have filtered out the objectionable elements of riba, gharar, and maisir, and what's left is Shariah compliant or Takaful. Okay, we also discussed in this chapter, in this episode 6, the problem of to implement the concept, because how do we go back practically to all the participants to ask for additional contribution when the tabarruk fund is in deficit? It is almost impossible, at least for a country like Malaysia, because people will be comparing with insurance. Alright, so that's the problem with what we learn. Okay, so with that, we have now come to the conclusion of episode 6, which is the concept Takaful. Okay, this has been a long journey to get to this. From this onwards, we'll be talking about the Takaful as practiced in Malaysia, the laws, the models, and the hidden benefits. Okay, for those who are who wants a shortcut, okay, they may not have the time to go through the episodes 1, 2, 3, 4, 5. They can go straight to episode 6. But for those who want a shortcut, but I don't recommend it, because I feel that you should go through the journey to really understand the problem of insurance and how we solve it by introducing tabarruk. And as we just discussed just now, this is also have got some implementation problem, and we'll see how this is overcome in the next episode. We call it commercial takaful. Okay, alright then, we've come to the end of our episode 6. Bye for now. See you again in the next video, inshallah. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh, and peace to all of you. Bye bye.